Hi everyone, this is your review video for your quiz on payroll. The thing I really want you to take from the last chapter, chapter 11, is payroll. And to do payroll entries, you really need to make a payroll register because it just makes it much easier to go through and figure out what's supposed to go where, because the entries are big compound entries and they can get confusing. So I'm going to be working in Excel today because Excel makes it much easier to do the calculations. Before we can start completing our payroll register, we need to understand what taxes are related to employees. And there's four in general. They are OASD, which is Old Age Survivor Disability Insurance, though you may know it as Social Security. Medicare, insurance for people of elderly age, people over the age of 65. And then SUTA and FUTA, which are state unemployment tax and federal unemployment tax. These are the four things that are related to payroll. Here is the catch. For OASD and Medicare, they are paid by both the employee and the employer. So they call those the matching taxes, because whatever amount we as employees get taken out of our paycheck, our employers have to pay that same amount. Whereas SUTA and FUTA, the unemployment taxes, are paid only by the employer. So us, the employees, never have to worry about those. Our employers have to pay for it. There's limits currently for each different type of tax, and the number changes. These numbers I took right from an example problem. They are not current, but don't worry about what the actual amount is. What you need to know is that for OASD, you get taxed at 6.2%, and it's always been that rate up to a certain amount of earnings. We're going to say it's $118,500 in this example. After that, you stop getting taxed on them. So OASD, or Social Security tax, only goes on the first portion of your earnings. For Medicare, you get taxed at 1.45% for a portion of your earnings, and then instead of going away, it actually increases. So you pay 1.45% on your first $200,000 and then 2.35% after. These are the matching taxes, which means employees and employers have to pay both of these taxes, OASD and Medicare. Note to remember here is that employers, even though employees jump to 2.35% for Medicare if they make a lot of money, employers pay 1.45% regardless of how much the employee makes. So they never have to pay that 0.9% bonus rate. For SUTA and FUTA, the rate is, at least in the state of New York, is 5.4% for SUTA and 0.6% for FUTA. These are only on an employee's first $7,000 of earnings each year, and they are only paid by the employer. Again, they don't come out of an employee's paycheck. So, to figure out our payroll register, the first place we need to start is with our ending cumulative earnings. We have 5 employees. I'm sure they have names, but we're just going to call them employees 1, 2, 3, 4, and 5. And employees 1, 2, 3, 4, and 5 have respective amounts that they began the period with. Well, when you add to it what they've earned during the period, that gives you what their cumulative earnings were for the year. So employee 1 started with $81,000 in earnings, and he or she made $4,100 during the period. That's $85,100. Employee 2 started with $113,000, made $7,100 during the period, so he or she now has $120,100 in earnings during the period. And we could just follow that formula on down through and see that employee 3 is up to an ending cumulative earning of $50,400. Employee 4 is up to $65,800. Employee 5, who is our new hire, has $2,500 in ending cumulative earnings. And for the entirety of the year, if I could type this correctly, ending cumulative earnings are equal to the sum of what our 5 employees have at this point, $323,900. Now we can start figuring out our taxes. So OASD, as we see up here in our rates, is 6.2% of the first $118,500 in earnings. So for employee 1, made $4,100 during the period, but their ending cumulative earnings are nowhere near that threshold cutoff, which means that $4,100 right here is going to get taxed at 6.2%. Well, if we take $4,100 and multiply it by 6.2%, we're going to get $254.20 that employee 1 gets taken out of their paycheck for Social Security tax. Employee 2 made $7,100 during the period, taking their earnings from $113,000 up to $120,100. But here's the catch: they only get taxed on their first $118,500. So the entire $7,100 of their earnings is not subject to OASD taxation. Only the amount that gets to $118,500. Well, if they started with $113,000 and they only get taxed on the first $118,500, that means the difference between these two numbers, $5,500, is all they're going to have to pay OASD tax on. So the amount of OASD tax is $5,500 times that 6.2%, which is $341. For employee 3, we don't have to worry about them going through the threshold. They've not come close to making $118,500, which means their current period earnings are all going to get taxed at 6.2%. Employee 4, again, we don't have to worry about them going to the threshold. They're only at $65,800 for the year, so that full $3,300 is going to get taxed at 6.2%. And for employee 5, they just started, which means they're definitely getting taxed the entirety of their earnings, $2,500 times 6.2%. And in total, our employees are getting an amount taken out of their paychecks equal to the sum of each employee's OASD tax, which was $1,103.60. Let's move on to Medicare tax. For Medicare tax, it's 1.45% of an employee's first $200,000 in earnings and 2.35% thereafter. Well, as we can see from our ending cumulative earnings over here for each employee, no one's close to going over $200,000, which means each person is going to have to pay 1.45% of their current period earnings for Medicare taxes. So we can just take current period earnings and multiply it by 1.45%. That'd be $59.45 for the first employee. And then if we do this all the way down, $7,100 times that 1.45% gave us $102.95 in Medicare taxes. $2,400 in current period earnings for employee 3 times that 1.45% gave us $34.80. Same math brought us to $47.85 being withheld from employee 4's paycheck for Medicare taxes and $36.25 for employee 5, which means that the sum of all of the Medicare taxes withheld from our employees is $281.30. Given in the problem is the amount of income tax withheld from each employee's paycheck, the amount of health insurance that each employee gets taken out, and donations to the United Way. It's not uncommon for people to make charitable donations. There's also other things that could be taken out of employees' paychecks. Contributions to retirement plans, employee stock options, all of these things. But for now, we're just going to have it be these. So let's worry about our total withholdings. Well, what's getting withheld from employee 1? Well, it's the sum of the OASD taxes getting taken out, the Medicare taxes, the income taxes, the amount that employee 1 has to pay for health insurance, and employee 1's contribution to this charitable organization, the United Way. If we add that up, it's $1,230.65, which is coming out of employee 1's paycheck for taxes and other deductions. Withholdings from employee 2, it's just going to be the sum of those same numbers again. And when we add those 5 numbers together, we get $2,395.95. So we can do the same math for employees 3, 4, and 5. Add together OASD plus Medicare plus income tax plus health insurance plus any other withholdings that you have, like United Way, gives total withholdings. And the total withholdings for employee 3 was $711.60. For employee 4, it's $1,153.45. And for employee 5, it's $866.25. And when we add all that up, the total withholdings coming out of all of our employees for this pay period is $6,357.90. So what is each employee's net pay? Well, it's their current period earnings minus their withholding. So if employee 1 is making $4,100 but getting $1,230.65 withheld from his or her paycheck for tax purposes, that means that the net pay or take-home pay for employee 1 is going to be $2,869.35. Employee 2, $7,100 in current period earnings, getting $2,395 and change withheld, means that employee 2 is going to take home $4,704.05. And we'll do the same math for everybody else. Always taking your current period earnings minus your total withholdings gives take home pay. So the net pay for employee 3 is $1,688.40. The net pay for employee 4 is $2,146.55. And the net pay for employee 5 is $1,633.75. All in all, our company is going to have to transfer a total of $13,042.10 to our employees, probably by direct deposit, but maybe we cut somebody a paycheck, who knows. But that's the amount of actual pay that we're going to transfer to our employees. Let's figure out what our salaries and wage expense is. And our salaries and wages expense is pretty simple. It is our withholdings plus our net pay. Even though we're not actually handing over the cash for the taxes yet, we're withholding it, we still get to record that expense during the period. So for employee 1, it's $4,100, and hey, that's equal to the current period earnings. For employee 2, we're withholding $2,395.95 and giving employee 2 $4,704.05 to take home, so the total salaries and wage expense related to the employee 2 is $7,100, which, as we see again, is the current period earnings. Same concept holds true. It's just your total withholdings plus your net pay, which should always be equal to your current period earnings, which means the salaries and wages expense in total should be equal to your total current period earnings. So even though employees are getting taxes and etc., health insurance premiums drawn from their paycheck, you still get to record all of it as the employer in your salaries and wages expense. So let's record the journal entry to accrue the employee portion of salaries and wages expense for the period. Well, this is going to be, let's say, on December 31st. Like I said, we get to record the entirety of these costs as a salaries and wage expense for the period. So our debit is going to be the salaries and wages expense, or just salaries expense, depends on what the program wants to call it, for that total we had, which is $19,400. That's our sole debit, but we're going to have a ton of credits. What are we going to have as credits? So the account name for this is FICA OASD Payable. FICA is the Federal Insurance Contribution Act. It was the thing that created Social Security and Medicare. So OASD and Medicare both fall underneath the FICA label. So the account for your OASD taxes has the awful name of FICA-OASD Payable, and it's a liability. We're not actually sending this cash over. We're simply withholding it until we have to pay it in, which we're usually going to do every 3 months or so. But so let's create a liability for the OASD taxes we owe, FICA OASD Payable. Next withholding that we have is our FICA Medicare Payable. And as we can see from our payroll register, that's $281.30. And then next up, we're going to have a credit to employee income taxes payable. And that is going to be from our payroll register for $4,525. Underneath that, we have health insurance payable. And that's going to be for $388. And then United Way payable. As we can see from our payroll register, our employees had a total of $60 withdrawn. So that's all the stuff that's getting taken out. It's not the actual amount of money that we're going to have to transfer to our employees. Well, right now we're just accruing. So we're going to put it into a liability as well called salaries and wages payable for this amount. And that is always equal to the net pay. And conveniently, if you want to go through the process of adding this all up, our debits will equal our credits. We're accruing here, which is why it goes to the liability. If we were actually paying it on this pay date, well, then we would have a credit to cash for the actual payment. But right now, we're going to call it salaries and wages payable. What happened here is we recorded salaries, I could type salaries expense for the period. So that's the entry to record the employee portion of salaries and wages expense for the period. Now, in the second entry, we have to record the employer portion. And the employer has to pay two things. Again, as we saw way up on the top, they have to match OASD and Medicare taxes. Then they have to pay SUTA and FUTA taxes. So let's start with our debit. For this journal entry, the first thing you want to do is you want to debit an account called payroll tax expense. I have seen this also go into salaries and wages expense, but most companies like to have a different account for the taxes paid on the employer portion. How much? Well, we don't know yet, but we're sure going to find out. For the first thing we need to record is the amount that we're paying towards Social Security. Well, it's the matching tax, which means whatever amount our employees are getting withheld for OASD, so is the employer, which means we're also going to have to add $1,103.60 to OASD payable for the employer portion of Social Security withholding. For Medicare, there is one hitch right here, and that's the employer never pays this extra rate, but as we said, we don't have to worry about it because none of our employees are over the threshold amount for Medicare of $200,000, which means that's going to be a straight match as well. So let's credit FICA, Medicare payable, again for the same amount because we don't have to worry about any differences from employee bonus payments to Medicare. And then we have the two taxes that only employers pay, which is FUTA payable and which is SUTA payable. State unemployment, federal unemployment. Well, how much is that going to be? Well, we'll go up and look at our rates, and we see that for each employee's first $7,000 of earnings, 5.4% of that has to go to the state, or the employer has to match 5.4% of that to pay to the state. They also have to match 0.6% of that to go to the federal government, but it's only on the first $7,000 of earnings, which means employees 1, 2, 3, and 4 all had beginning cumulative earnings way above $7,000, so they're no longer subject to have to pay FUTA or SUTA taxes on their earnings. Employee 5, however, is the new person. The new person has no beginning cumulative earnings for the period, which means the $2,500 that they made during the period is subject to SUTA and FUTA taxation. So, starting with FUTA, what we're going to have to do is take the amount that employee 5 has made, because it's all subject to this taxation, and multiply it by the federal unemployment tax rate, which is 0.6%. That's going to be $15. We're also going to have to multiply it by the state unemployment tax rate, which is 5.4%. That's a total of $135. Again, only the employer pays that. Employees never pay it. What we did here is we recorded the employer payroll tax expense. Two entries left. First is to journalize the payment of employee salaries and wages. Well, this one's nice and easy. See, on December 31st, all we're going to do is take that salaries and wages payable liability off of our books. And As we can see above, we put it on the books for $13,042.10. Well, that's what we're going to take it off for. And then we're going to have a credit to cash because we're actually paying it. So $13,042.10. We recorded the payment of salaries. Of payroll withholdings during the period. Well, all we are going to do now is we are going to take each one of these liabilities that we have created in the first two entries, and we're going to get rid of them and pay them off in cash. So let's start with FICA OASD payable. Sounds like a good, reasonable place to start. FICA OASD payable. Liability in this case going down. Well, how much did we have in that account? Well, we can see above that we had $1,103 withheld from employee paychecks, and we had, as the employer, to match that, which means we have $2,207.20 sitting in our FICA OASD payable that we're going to have to hand over to the federal government. For Medicare payable, that is going to be equal to the $281.30 that was taken out of employers' paychecks plus the $281.30 that we had to match. And that's a liability going down. Next up, let's roll through what we had in the employee portion. We had employee income taxes payable. That is a liability account going down, and that's going to be for the $4,525 that we had in the liability account. We have health insurance payable. This would probably have a name like Blue Cross Blue Shield payable or something. We'll just call it health insurance payable right now. And that is going to be for $388. Underneath this, we're going to have United Way payable. And we have that liability on our books for $60. And then we have, that's the end of the employer portion, or employee portion. Now we have the employer portion, and their two taxes were FUTA payable. Again, liability account going down. That was for $15. And SUTA payable, which is another liability account going down. This one is for $135. So what do we have? Well, we got to pay all of these, which means we are going to have to send out an amount of cash equal to the withholdings that we are going to be transferring to all these different agencies like the federal government, the state government, some insurance company, and the United Way. And that's a total of $7,892.80 being withheld from us, or that we're paying from all the withholdings we had. We recorded the payment of payroll taxes. Good luck on your quiz, everyone.